GBP USD, another losing trade from 20th October. There might be a hope for some breakup, actually, if looking at this from a higher time frame, but to be quite honest, there's some kind of shape and the overall trend is downwards, so longing it would be very like wishful trading. Let's look at this from a little bit closer perspective. So there might be a fib, which wasn't ideal. The candle flow size ratio was completely gone. There was no clear fib setup which could say, okay, this is reversing now. Therefore, so there was also a lack of a bigger picture. And I'm not talking about particularly bigger picture. It's all on 1 hour time frame. So we were so far away from even 50% of retracement. Not talking about 61.8, and still there is the same old rule that if the 61.8 gets invalidated or disrespected, then the price bounce from 50, and then we have continuation of the sideways or a bearish trend, or whatever trend it is established right now. Of course, the market conditions can be different sometimes, but this is like for the sake of this case. And the market conditions were like this in the last quarter of 2025. So going long was unjustified. It was just a stupid mistake. I wouldn't do this if I was paying more attention, if I was doing this journaling, but I'm not. I wasn't. Oh yes, I can see. So there was a hope this is going to hold, like this VWAP is going to hold. But the entry was here, like the VWAP gives you aggressive plays and not a strategic long-term plays. So basically, cognitive bias, fake fib, like this could be a fake fib, but again, you could look at the structure here and see clearly that we struggle to break out to this point, so probably it's not so very reasonable to get there. And simply looking at the flow size candle ratio would suggest that there's something off. What I did additionally in this trade was spreading the risk into 3 positions instead of just one. So I opened 3 positions and not one, and all 3 of those hit the stop loss. But I think I should be going back to spreading positions into the 3 parts, and then once a part of the position hits a like 1-to-1, the other ones could be moved towards break even and perhaps more risk reward ratio also. So that's something to be mindful of. So this is a GBP CAD, 20 October. It didn't work out. I see a pattern emerging. I was, even though if it was fib from there, it was still a 50% fib. It should be actually from there. But if it was a fib from over there, then we went to 61.8 first, not first after reaching the bottom of this stop loss. This was interesting. That, you know, taking a trade like this, well, you know, thinking that it brings something. It doesn't bring anything. If there is something like this, like, we have to establish clear rules for using fib. If there is no fib, then there's no forcing fib. You should not force a fib to look better. We just take the movement because the experience shows the price is going to go back, and so should we trade. And additionally, we have the confluence of 29.2 if we keep the fib like that. So just keeping the fib like this, having in mind the 29.2 level. 29.2 is it's not a Fibonacci. No. This is my number. I just discovered that this is somehow the best level to see, to look at. And this is the most universal flip that I have experimentally invented for myself. But anyway, it doesn't matter. It doesn't matter because I still have many losing trades. And so we can see that this bigger flip is some kind of impulse. It has 7 days. It's a wave, or it's a sequence of smaller waves, so perhaps an Elliott wave. First wave, second and third prolonged, and then correction, 1, A, B, C, and then trend continues to fall down. So instead of forcing a fib, forcing a long where it should not probably be, because first there's like, firstly, we are way beyond 50% of retracement or 61% of retracement. So the possibility, of course, there can be a strong possibility, but sometimes it is, that in this case we might see like some drastic shift and the market goes higher because the impulse is very strong, and it's so strong that it doesn't reach the 50 even, so we have to long it. But usually this is not the case. Usually price reversal, then we got caught up in long positions that are losing positions for all day, and then at the end of that you lose. So not a good trade. Of course, a good trade to learn from. Let's look at this from a higher perspective. So, okay, I get it. So here was a structure, and like, I could think that this structure could actually hold this, and it did, but it failed to hold. It was a strong support actually. So perhaps that's why I wanted to long this position. I remember this trade. This was like quick, like short time after I discovered, with help of some person on the community that I'm a part of. Uh, she, she told me about this candles, that I should pay more attention to the candle like flow and size ratio, because it gives the clues about what happens on the market, and not many people even care to pay attention to this. And this is clearly visible. So this is you the clue that the trend has shifted. Small candles on the left, bigger candles on the right. Pay attention and read the chart more frequently. So yeah, actually doing this, what I'm doing now, it helps me become a better trader. And if you find it helpful, then this is also good. But you should do the same actually. You should record yourself, or yeah, actually you should. Huge selling pressure, but the buyers are stronger only in this case. But look at the colors. So yeah. And going long here was wasn't justified. It shouldn't actually happen here. I should have been more patient. I should have been more patient and actually take fib from there and keep it like that. And I should avoid trading in these conditions anyway. That's why I've been stopped out on this trade, because the market was ranging. It was pushing higher. It wanted to go higher, but it was ranging a lot before freeing from this consolidation zone. It took him actually a while. 8 days, yeah, more than that. So minimum 8 days, so 1 week without trading this would be, yeah, perhaps appropriate. And then there was a setup which wasn't a clear good setup. This market was nasty, and the D was D. Trading this was not good. Like, it didn't give you this nice candles. It should give you the candles like this all the time. Then trading would be a lot easier. So impatience, measuring wrong fib, and trading in consolidation. Instead of, perhaps it would be a good position for a swing, but not for a day trade. AUD USD, trying to long it, but it was too early to long it. And actually, look how perfectly the market is trying to illustrate a wave, so to say, like how of a perfect curve it is. And so this one wave, or this one like indentation in this curved invisible object was a one indentation too early to actually long it. This trade, I can say, I don't know if I spoke about this, probably yes. 21s. Yes, we've been talking about this. I will probably this was a loser because I caught the winner short. It was a wrong time frame, so wrong approach. Day trading, it should be a swing trading. And so, but let's focus on this current one. So the usefulness of a volume profile can be visible over here, because the POC is high in this retracement. Let's look just at this. Now, if we look at this one particular retracement, then I mean this particular indentation, then the POC is not high. But if we look on the 3 previous indentations, or just a piece of structure there, then okay, it would clearly point towards shorting it. That's interesting. Discovering the usefulness and actual use case of a POC in trading. So there was a fib. This fib, let's make it a little bit shorter. It was a 50% fib, and it was a poor confirmation. So 50%, and additionally, the pots which would be high. So I have to remember this. So normally if you fib, you want to short it. But this time you see a fib, a 50 fib, and you want to short it. I just said short it, yeah? Long it. But you know, I'm a little bit overcomplicating stuff, because you know, it's not a art to sit there and wait for a perfect fib and only then you enter long or short. That's too little. You have to be actually able to trade more markets, more market behaviors, and that's the key. So that's why I wanted to enter such trades, to be able to learn from it. And that's good that I discovered it, because this is going to be handy and helpful. So otherwise, no, that was just this fib that wasn't 50%. So we can just note that when you have such fib which is not respecting a golden zone, then we should be looking at a volume profile, and then we can be more sure about eventually going long or short on this trade. Okay, this is golden. This is golden. We are discovering new strategies. And actually, not that difficult strategies at all. GBP and ZD. Let's dive deep into this one. Is there anything we're gonna find, or is this just a obvious losing trade because of a greedy tight stop loss? Well, let's look at some basics. What does a volume VWAP says? According to this VWAP, we could actually and make the stop loss even tighter so it doesn't say us a lot. And if it's the fib, the most current one, small scale, like the scalp, almost scalping fib, the fib is not respecting 61.8, neither 50%, it's even bouncing from the 50. So I guess because of that one big candle I have entered into this position because it engulfed the previous one. But other than that, the flow is bad, and this huge candle downside, it would suggest that there are going to be some difficulties ahead. It was pure luck that it even went higher after that. But let's study it a little bit more. Why would it? So it was a strong trend, yes, 3 big candles. No, not a significant retracement there. Just to the 29.2 fib, which is probably a coincidence. Or it's more like a market structure thing, because here we have some structure. And yeah, we are going in an upside direction, so going along on this is a reasonable action. Let's look at the profile, anchored volume. No. Fixed volume range. And the anchored volume profile, it's not something that we want to have. Okay, what does it say? Does it say anything relevant? Which one is the pots? I think this one. So basically this is a B shape volume, or probably like B shape, the downside B. I'm trying to make sense of the volume profiles, and so at least I think that I'm starting to make sense of them. How to use it? It's a B shape. So there's a P shape and B shape and D shape, and also a big B shape. And this one is closer to a B shape. So previously when we had a P shape, then I was trying to get in a, when we had a P shape, I was trying to get in a fib, which was a 50, and then the the POC level from a P-shape volume profile caused the price to fall down. And right now, as we are discussing a B shape, and we have some retracement, which is actually very shallow, and here it's even like going like this. We are not reaching the 50%, but still with the B shape volume profile, we can see that the price is escaping in the upper side. That's quite interesting to know. Okay, so how to make use of this use case of this. Anyway, this trade would be very nasty and was very nasty. It wasn't a nice trade. Let me change the settings of the profile. Okay, I just adjusted a little bit settings of this volume profile. I changed the POC to this line, to this like velvet or purple line, and so we have the type of P-shaped volume profile and B-shaped volume profile. So in this study case, there is a B-shaped volume profile, and the price action did something similar to this, which was then a continuation of a bullish trend, which wasn't that obvious. So the volume profile should be there to help. So a D-shape volume profile, that would probably suggest some indecision, and a B-shape volume profile, I have no idea where it might be and what could it actually signalize or signal. The trade on GBP NZD. I didn't have the markups of this trade, so I have to search for the exact hour and see. I don't know if the stop loss placement is correct or not. But anyway, it got stopped out at stop loss. So looking at this, I can clearly see that there was a fib. I was probably looking at this fib, and I was hoping this retracement is going to now work out in my direction, especially seeing those big candles, but I have ignored the overall structure, which was poor structure. Candle flow size ratio, I would say strange, at least. Fib 61.8 was not validated. And let's study this under a volume profile. There is a B-shaped volume profile with the parts correlated with 61.8, although it's not all that we are looking at. The volume profile would suggest that the bias is this volume would suggest that the orders are accumulating in this area. So the most orders are the heaviest orders are placed in this area. So therefore it would be reasonable to look for longs given the previous structure, we could just, like, for example, make this like that. It's still a B shaped in a way. I guess this is like, this move would be like 40%, and the rest a heavy volume is the remaining 60% of this range. No, we cannot do anything from that, at least me. So it's anyway having your own bias, but being the most objective you can actually be. If we look at this like that, then the B shape is of course, like, because this is also market structure, like volume profile is combined with market structure. It's just a derivative from market structure, from a price action structure. And so we have a B shape over there, and as you can see, the POC is there, and the price visits that again. It's not obvious, like in confluence, like this B shape volume profile and this failed fib, which went below 61.8, would suggest that we are not going to go immediately high or higher. Therefore, it was a tricky one. Like, therefore, I failed. Therefore, this trade failed. And you know, after that, we had a P shape. No, not a P shape. Because we are not interested actually in these candles. We are actually interested in those candles. And so you can see clearly that there is a B shape again. Yeah, B shape going higher. B shape still going higher. But in this case, there was a opposite situation with a fib, because in this case we were trending above 50, and here we were trending below 50, below 61.8. So the market structure and volume profile is something interesting to study together in confluence. And I think I don't need anything else, like moving averages. Like, there can be too many things confusing with each other, and so I don't want to be like affected by too many variables, because it's easy to lose track of what's actually important and what's not. Oh, of course, it's easy to say, like, so where should I enter? Seeing this, where is the right entry? And the answer is, I don't know, like this candle. Why? It was 13 o'clock, first 1 p.m. European time. It would be like pivotal trading in a way, because there was no fib. The only fib So after you see something like this, all that happens plays actually no role. But again, look at this 88.6. It's there not without a reason, because I was studying the markets like crazy for all the time. No, actually, I don't have an answer to that. Why? And where is the a perfect place to enter? I would say like seeing this, just adjusting your stop loss to perhaps 88.6, and it would get triggered anyway. That's a good question. Not another trade, GBP THF. So I don't want to believe that simply one time frame is enough to evaluate if a trade is good or is going to be good or not, but it seems like it does. For example, I entered on this candle, this particular one, not engulfing, just the opposite direction candle, which gave me a fantastic opportunity to get humbled just hour or second hour after opening the position. And so what was there like other than that wrong? So 61.8 retracement. The price have not retraced there, so this is not a retracement. Other than that, the structure of this overall fib was not pointing towards any strength upwards, not any steam for the upwards movement. And I can say that like seeing actually where the price went, but like looking there, I can only say that okay, we were higher, we have failed to go higher until now, and there was also another failure, strong level 29.2 probably, yes, 29.2. We bounced from that level, and of course the price could stop, but it didn't stop there. So it was a wishful trading. Let's look at a volume profile. But firstly, let's look at the moving average. So the blue moving average was kind of narrowing. So yeah, consolidation was in its fullest. Therefore, like there wasn't clear bias whether it's going up or down. But I decided it's going to go up, and it humbled me. Let's look at the volume profile. And let's use all the data that we have, which is in the range of this fib. So we have a B shape profile, which is good. And what was the B-shaped profile about from our previous trades? Do you remember? Because I forgot. I don't want this to be confusing to me right now. Right. Okay, let's narrow it again here. And so we have a D-shaped profile almost, or a big B. But the point of like the pots, what does it even mean? I don't know. POC is above. If we look at the beginning of the fib retracement. So let me look. So B shape was suggesting the upwards movement because the placement of the orders was below. Also here. But perhaps, wait, what if we narrow it again, like there? So here is, okay, we still have kind of B-shape volume profile, to be honest. And we have the val almost aligned with 88.6 and also with the swing of the price. So let's make something out of it. Let's go back to GBP CHF into our trade. So again, let's not have any buys. This is the fib, yes? We are interested in a fib. We are measuring fib from there actually. And if we measure the fib from there, then we have a P shape or a B shape. It's a P shape. Let it be a P shape. So if this is a P shape, which is, let's look at this from the market structure point of view. The fib is distorted. It's not flowing. So the orders are being placed there because somebody knows that the market is going to be dropped. And we don't know it yet. But here, before that move happens, we have this kind of consolidation phase. We have a B shape volume profile. And what happens? We go slightly higher, slightly higher. So, okay, P shape is also if something is placed above, it has to fall down. If something is down, it has to go up. So there's this kind of logic to that, which is not that obvious because we have to measure right movements, and we have to be interested in fib. So the area where what we are measuring, and also, so the volume profiles are not that easy at all to use, but let's not get discouraged. And what now? Why is it not a P shape? Perhaps now it's a P shape. It's more like a P shape now to me. Like it's a B, but upper B. So the placement of, in relation to a fib retracement, it plays a role where it is. Yeah, anyway, the POC is here high, and what we see a drop, and come back to the 29.2, and also POC, and then again drop. But this is not a fib anymore. This is not a fib trading anymore. If it is, then it's again distorted, and it would suggest that we are going to actually fall and bounce from 50. Yeah. I don't want to make these videos too long because they are very intense. Because I like to dive very deep into stuff. So I hope you like it. Maybe I'm gonna do one more because it's already late. It's already 7 a.m. And I have to do some other stuff as well. But anyway, let's make a screenshot of it. And this is quite important to be mindful of. Let's not get confused with that. Yeah, and I should be pausing now. US tech. I had a feeling that in my workout in the market might actually drop a lot. It was a wishful trading, range trading, a pivotal trading, and it failed because of the greedy stop loss. But just a few hours later, it did just that. That's interesting. So let's look at it in more details. What could we done? Perhaps what could we do? I think I should have waited for better entry confirmation because that candle doji was nothing. It was just not even a reverse reversed direction candle. So it was just because of I was hoping it's going to fall down because it was at a significant level. As you can see from the grid is always on significant levels, and it traded a little bit more, and then the volume of the candles increased significantly. No, I actually don't. It actually didn't. It did over there, so there was increased volume, and then the volume was just like, slowly getting to normal. Yeah. And then from 7K to 9K, 7,000. From 11,000 to 14,000, 12,000, 13, 14. Wow, this was something amazing. From 14K to 187, 85K. Something amazing. Okay. So calling it up, just my dark side wanting to call the top and be right. From what I can see, I could prevent many losses by staying out of the markets and not trying to call the top or the bottom. AUD, USD. I don't know why I took this long, to be honest. 13 o'clock, AUD, USD. Looking at the market structure, it was really bad idea. Like even if I took a fib, we were far away from 50. We just reached then after some time 61.8 when my stop loss got hit, of course. And I can see I place here a volume profile. For some reason it was P, so what stays up must go down. Let's extend this profile. And look, the POC gives us the important level for later retracements. Well, actually like this. So I was measuring the triangles the other way, but today I'm doing this right like this. It's more convenient, more aesthetic. So it's important to not have any bias towards the market, and I most certainly had a bias looking taking it long from here. Let's use the row size 20. Let's get rid of that. Why would I even think of the price going there? And from 50, bouncing from 50, it's going to go to the moon. Why? P-shaped volume. Okay. So back then I was studying the volumes, the volume profiles. So we had one reaction with 50, and then it wasn't actually a real reaction, it was just a wick from the candle. And so we bounced a little bit from there, but never reached higher point. So the price consolidated a bit. What happens if we measure the whole consolidation until the entry? We have again a P shape. Here again, P shape. You know what? I have a feeling that we should get rid of the opacity. It should be 0. The problem is there's no fib retracement to measure other than, let's say, this one, which is absolutely a failed one. It's within the consolidation and within the ranging market. And we had a, yeah, we can call it a fib because it's not quite a fib. Like it's disrespected 61.8, bounced from it. Let's look what happens when we do measure it like that. So we would wait. Again, P shape, because the weight is upstairs. And why not trade it? Like, why not? Why not expecting it to bounce again? And trade it like a ranging market, because it did that several times. It consolidated a while. Oh, there was actually a one good, probably fib setup. No, it wasn't. It wasn't that good. So distortion and a consolidation. Not perfect fibs, like AI generated fibs, I would say. Hands with 6 fingers instead of 5. Signs of manipulation. We have to pay attention to that, and so we can probably predict some movements. And why going long here? So on the short term, like we were in a ranging market, expecting it. Oh, I see it now. I see my line of thinking now. I was thinking, because I did not enter trades without analysis, ever. So I was thinking, okay, we have a ranging market. We are here. This is a pivotal point. This is also a 50 fib. So probably there's a high probability we're gonna bounce. Instead of that, wait, where's my RSI? Somebody stole my RSI. Have I turned it off myself? When did that happen? Okay, something interesting on RSI. I made a channel, price channel on, or trend channel on RSI, and here you can see a capitulation going on and some divergence. If we study each candle, so this candle was the moment of capitulation. This candle and the bounce from slower period. And another candle, which we could argue that it was still in the range of some channel, which wasn't, was already way below that channel of RSI. So early signs of capitulation on RSI. But paying attention to all the details would be very exhausting, to be honest. And it is very exhausting. Very demanding. So looking at RSI, it would give us the confirmation that there's actually over. We are not going to trend anymore in a range market. But we are going to visit that 61.8. And we have. Oh, I get it. I just clicked twice and then it disappeared. So nothing bad happened to my RSI. And let's give it zero opacity because it's only distracting me. Yes. So the best practice would be to just avoid this trade because it was consolidating too much. There was a very nasty structure, 50% fib above. Okay, this was a last one. I'm not gonna do this analysis today anymore. I still got many pairs to analyze, and I haven't done this like this in this detailed version before, which is giving me a lot of insights. And I hope if someone actually does watch this video, he might find it interesting besides my boring or bored voice. This might be not very interesting for most of people because this is very technical. It's technical analysis anyway. I hope that at least I'm going to find it helpful. I am finding it helpful, like simply being able to focus on that for a longer period of time gives me many insights. So thank you for watching.